Hi, everyone. I'm Stacy Francis. If the stock market makes you feel a little nervous, you're not alone. For a lot of people, investing feels confusing, unpredictable, and honestly, a little bit overwhelming. So let's take a few minutes to walk through what actually happened in 2025 and talk about where you need to be focusing for 2026. 2025 was one of those years that if you were just reading the news headlines, you might have thought that everything was falling apart. We had trade wars and trade tensions, political noise, and a sharp drop in stocks in the spring at one point that was down as much as 15%. That's usually when fear starts to creep in. But here is the important part. Those investors who stayed put, who stayed invested, were deeply rewarded. At the end of the year, markets recovered greatly. US stocks up 18%, developed international stocks up 30%, and emerging markets, the star performers, posting returns of 33%. Bonds also were no slouches. Bonds also delivered solid returns. A balanced portfolio of 60% stocks and 40% bonds did powerfully, up 14%. It's a powerful reminder for all of us that diversification really matters. It shows why it's so important. So, what's really going on underneath the headlines? Well, we are in fairly steady economic ground. Business productivity is high, unemployment is low, oil prices are low as well. Inflation has cooled, not spiraling out of control. And so, because of this, we find ourselves in a pretty good position. That being said, inflation hasn't totally settled back down to normal. And so, because of that, the Federal Reserve is being somewhat cautious. We don't necessarily expect too many cuts here in the spring of 2026, but later this year, there most likely will be some changes of leadership at the Federal Reserve with Trump putting a new nominee in place. With that, we do expect more interest rate cuts potentially in the later part of 2026. And what does this all mean for 2026? Well, overall, the outlook for stocks is positive. Companies are showing and posting high profits. Some of the trade tensions we saw are starting to cool. However, there is definitely a reason for caution. After a great year of high returns in US and international stocks, things are not quite as cheap. And so returns might continue to be a little bumpy. But the good news is that we expect UX stocks to do well, and even more so, expect developed international and our star performers of last year, emerging markets, to continue their high returns. And what about bonds? Well, bonds are a little trickier right now. They do provide income, which is helpful, but investors are not being paid as much for taking on extra risk. So, what does that mean? Well, reaching for the stars with higher returns and high risk bonds, now is not the time. Instead, we're focusing on shorter term bonds, high quality bonds, being careful and making sure that we're avoiding areas where risk just doesn't pay. And quite frankly, risk isn't worth it. So the bottom line, 2026 is not going to be smooth. It's not going to be a straight line. There are going to be headlines. There are going to be moments when potentially you feel uncomfortable, and that is normal. But what matters most, it's not about predicting the next move in the market. It's about having a plan. It's about staying diversified. It's about not letting fear drive decisions. And if you want a deeper dive into 2025 and what to expect in 2026, I encourage you to check out right below Francis Financial 2026 Market Outlook and our 2025 Market Recap. And I interview our Chief Investment Officer, Matt Hartson, about these topics and more. We would love to have you look and also reach out to us at Francis Financial if you want a second opinion on your portfolio. That is what we are here for. Francis Financial, plan, grow, protect, making sure you have the best 2026 financially free, financially sound, and financial peace of mind. Thank you for watching.